So you think the dividend is too small? You think we should spend more money for investors in the future? I promise you we will do better. First, I promise you a booklet on top of the dividend, which you get, after the end of the day, 238 pages. I can tell you this is benchmark for the industry about our strategy. Second, I promise you as an additional dividend, a great barbecue tonight. And thirdly, you get this cool sneakers on top of it. Is that a deal? Okay. Guys, very well welcome to Deutsche Telekom's headquarters here in Bonn. I hope that you have a great 12 hours with us over the next day. I hope that you feel the hospitality and let's say that we are really excited having you all here. And I even like to welcome the ones who are not with us today, spending their time on the webcast and joining us. This is a big thing for us, I can tell you. It might be one of hundreds of you, but for us this is really a big thing. It took us months to get it prepared, to think about things, and I can tell you, it is not just only talking to you, it is for me even that relevant talking to Insight. Because, a capital market day helps us to bring an organization onto a track for a long-term perspective. And so it's not just a commitment and a pitch for you, to convince you that Deutsche Telekom is something special in the telco market, which is anyhow a difficult market, but that is even more for our people that we make commitments and that we have to walk the talk thereafter. So this is a big thing for us, and it took us a very intensive discussion. What I'm talking about today, the first thing I want to talk about, let's say, what drives us, what we believe, what we have achieved, and then I will talk about, let's say, an update about our strategy. Honestly, a little bit boring, because we keep on track. And then I will talk about the commitments. Every detail of my presentation will be, let's say, detailed out by the team sitting there. And I don't want to say hello to all my guys here are sitting around that one. There's only one guy, which I want to especially, say hello to this morning, which is Srini, because he's turning 34 today. So Srini, happy birthday, Srini. So, relax. I hope that we do not have only a working session. It should always be a little bit fun. When I came into the office, and I'm now more than 12 years board member, but became CEO, the question was, what are the things which are important for me? What are the ones, where I want to focus on? And we discussed that then in depth with Thomas and some other guys, on what should drive us. And this thing is, I think, the basis of what we are doing. The first thing, we are dedicated network investors. So if you want to understand me and us, understand that the core of everything what we're doing is the network. Maybe less Internet of Things, nice digital gadgets around it, very much focusing on the network. Put your money where your mouth is. Second, stay focused. A very focused portfolio approach on saying this is core and this is non-core. A focus on the geographics. We have said we're not going out of our footprint, and we stayed in our footprint during the entire time. We even haven't looked into the opportunities of Myanmar, of South America, of Africa. We are just focusing on the area where we want to strengthen our strength. And a very restrictive capital allocation. The DNA, knowing that it's the biggest scarce resource for an investor, for an infrastructure, is money. Thirdly, passion about customer experience. Guys, there was a time, even in investor base, where everybody was talking about we become the Amazon of the telco industry, the online service portal for our customers in the future. Yes, that's true. We have to be more online in the way how we're serving customers to make it easy. But this is only one part of the equation. There is a very strong value in the custom intimacy which we are creating with our shops, with our service centers, with the maintenance, with the field forces, with the people on the ground being there. And we have to mix that. Dialogue marketing is something which we have to strengthen our thinking, keeping the relationship in mind. Because the moment where we have an interaction, the moment we create loyalty and we create higher value. And this is a mathematical, it's a commercial equation. Fourthly, a best-of-breed team with entrepreneurial spirit. You have heard me talking about between the bureaucrats and the billionaires in Barcelona. There is this group of CEOs and teams sitting on their small kind of castles at the Rhine Valley and being the kings of their kingdoms. And they always want to treat this than rather thinking of becoming a minister of something bigger. And there are the billionaires who don't care about any kind of kings, they just move on and make their money. And somewhere in between is where we have positioned our thinking, where we have positioned the way how our team is running, from where we're coming from. Second, the generation shift. Telcos are getting old, especially the incumbents. So how can we get new, fresh blood on that one? Look, Bayern Munich lost, but it's a good example for us because it's anyhow our favorite team. There is a strong DNA of German blood in this team, the Thomas Müller of this world, the Neuers of this world, but there is a best of breed internationally into that one. I can tell you, 3 years ago, 5 years ago, this company was not even close to be as international as it is today. And I come to that, the combination of best of breed for technologists around the world, bringing them into our company, is something which is driving success in the future, which is driving differentiation of our company. Leadership and winning mentality. I think if you want to be leading, you have to be thought leader on certain areas. You cannot be thought leader everywhere, but you have to be thought leader and you have to create a culture of a winning mentality. This company is not defensive. They always want to put us back into this defensive mode. You're the bad incumbent. I tell you, we are not in this position. We do our thing, and we do it our way. Vectoring and super vectoring is just one example on how we're doing that. And if you go to #Werkstolz, and if you talk to the commitment of the people in our organization in the US and in our organization here in Europe, I can tell you we have improved by more than 30% points over the last year with regard to the pride of what you're doing. You cannot do this job without pride. And the last thing is walk the talk. Very German. Very German. Say what you do and do what you say. This is something where we want to stay for. And these were the 5 paradigms of, let's say, the overarching strategy which we have to say, we have to stand for something for the outside world. To be, let's say, shaped in a way. And this was driving us into growth. And I can tell you, if one of you would have told me, in 2014, Tim, you're the CEO, and the first 5 years of your tenure are growth in every single parameter, I would have asked you what you have smoked. So this is now what I can show you, looking hindsight, and that is, let's say, what we have. We have a revenue growth of an average of 4%, an EBITDA growth of 5%, a free cash flow growth of 11%, and we have a CAGR of our dividend growth by 9%. The commitments were significantly lower, especially when it goes to revenues and when it comes to EBITDA, 1 to 2%, 2 to 4%. The free cash flow was possible despite the fact that we invested more into infrastructure, and we were able to increase our dividend by 5 cents every year. Today, we announce that we feel so confident about the track record of this year that we are committing to 70 cents for the 2018 annual year being paid in 2019. So the last puzzle of the Capital Markets Day 2015 which is that say, what are you paying out for this year on your dividend commitment, is something we're going to state already today and not by the end of this year. This profile of growth was not only driven by the US, and you know that. If you look at the profile of the three big segments here, you see that we had a shrinking business in Germany, which is back to growth. Here now excluding DFMG, which we took into group development. You see the European revenue increasing by 0.5, and you saw the first quarter on revenue and even EBITDA with a 2 in front of growth. So an even accelerated momentum. And you see this outstanding performance of our US operation. 2015, I would say 50% of this group here told me, sell the US as fast as you can. And we didn't. Because we were convinced from a network perspective, from a market demand, from a customer service perspective, from a position, it is the right thing to stick to this. And I do not want to go into the track record of this one. Mike and Neville are talking about that one tomorrow morning. We supported the growth by customer growth. Okay, I hear you, market healing is good. Managing your backbook is the most important thing, right. But without growth on high street, you will even not convince your base. You always have to show that you are strong with innovation on the street, on the high street as well. We've grown our German base by 2.5 million customers. We have grown our European base by the same magnitude, and we have grown our US base by 11 million customers. This is on a subscription basis, on a SIM card basis, at market level. If you look to the service revenue market share, we have gained service revenue market share in Germany. The gap between Vodafone and us has never been bigger as after the first quarter. Second, we have grown service revenue market share in 2017 in our European markets. And US, nothing to talk about. You know, this was outstanding performance when it comes to service revenue market share. Without service revenue market share, without new customers, no growth. On top of that, there is a price. If you want to convince a customer in our industry, and our industry is not as smart as your industry, not as complicated, sometimes even, simple. Because if you do not have a network connection, forget about everything what we're doing. The basis of everything what we're doing is connectivity, connecting people, that they're able to participate in digital life. So if you don't have a network, you can make the biggest marketing, it's not going to work. You can shout loudly. So we always said we are investing. And we invested, you saw that, we started with 10 billion, now we are at the vicinity of 12 billion. And you see the spectrum on top of that, mainly the 600, 700 megahertz spectrum in the US, which we put on top of that in 2017. Up to 19 billion of investments. And despite a capex to sales ratio, and we might challenge us for this, which is 2 to 3% points higher than of our competitors, we were able to grow the free cash flow from 4.9 billion to 5.5 billion in the same magnitude. The price is high, but the award of it is even great. 95% LTE coverage, 80% vectoring coverage in Germany, the same magnitude of LTE in the European markets. And in 8 out of 11 countries, we are the leading infrastructure on mobile. I do not have to talk about Germany. In the last consecutive 5 years, there was not a single drive test which we haven't won. So every network test goes to us. And just yesterday or the day before, Open Signal was published, and the gap to Vodafone is significantly larger when it comes to data connectivity. Please have a look into that one. This is the strongest argument for our customers. And the moment you have this differentiator, you get more ARPU. You can have a higher price. In the US, same thinking. Invest into the infrastructure, invest into the network. 40 billion over the last 5 years into this equation. Now we have the best position on spectrum. Now we have an LTE rollout, which is covering 320 million pops. And now we have a network which is speed, with this VoLTE usage and other things, which is much better, Open Signal Test 1 and others, than the one from Verizon AT&T. Mentality. Bring me awards. There was an event here in this hall where we said, guys, bring me awards. We want to be the leading European telco. You have heard that? But leading doesn't mean by size. Who cares about size? Leading means how you do things. If Hannes has to do this event here, investor relation, I'm not expecting a good event. I'm expecting from him that he's doing in a leading mentality, the best investor relation meeting which you can get. Nothing else. There is no other place than number one. And this is what we taught these people. So bring me awards whenever you do. Whatever you do in your company, get the first prize. And I was not aware about what's happened in this organization. I can tell you, everybody is working on it. From the award for sustainability of Germany to the most ethical company in the US, from the P3 test drives to best service awards. Are we there on all relevant topics? No. But I think this is creating a mentality in the organization. It's creating an attitude of striving for better. And I do not want to go into the awards. The network awards are outstanding. 9 out of 11 countries, we are leading the best mobile network in Europe. And if you're committed to network, if you believe into network, I can tell you this is a strong proposition which we have. The T is the second most valuable brand from Germany in the world. Whatever you take of the surveys, BMW is the number one in most of these comparisons, but second is the T. It's magenta, it's what we talk about in a company. This is a strong value. It's an intangible one, but it drives things. And the same has to apply for service awards and for this customer satisfaction. US, I can tell you, Net Promoter Score, it's unbelievable. Germany, other countries, we still have room to improvement. All this coming together with a disciplined capital allocation. So how we are looking at it, and please challenge us later on that one, is to say you have to be very disciplined with the resource we are managing. First, I mentioned already, invest in footprint. We were not going out of the footprint during the last years. We stayed where we were, and we were investing here. Put your money where your mouth is. We said we do not want to be distracted by too many business models. So wherever we are, we want to operate as a converged company in Europe. So we were putting money on UPC, on Tele2, on BT, and other companies to form converged business models in every region where we are operating. Even in areas where we couldn't acquire, we have formed MVNOs with Orange and Poland and other markets that we have one single business model. If you run a company that size, the best is if you have one single focus point. It might be the wrong one, but at least in this one, you are great. You're doing the right thing. Then rather being all over the place and trying to be the internet guru, trying to be the internet company, trying to be a bank and whatsoever. We are not on these businesses. Invest in innovations in a different form as we did before. We formed DT Capital Partners. The current status of the first fund, which is closed, is an internal rate of return of something around 70%. 7-0. And we are ready now to open up the second fund with third parties. A lot of external parties that now want to participate in this fund to co-invest with us on this one. And I can tell you, this is not because we are a great corporate. It is because it's not a corporate. This company is not owned by DT Capital, by DT. It is owned by the management. The majority is in their hands. In every deal they're doing, they had to put their private money. And if they earn the carry, they could make even more money than myself. I don't care. So we create platforms where people can work totally entrepreneurial compared to the past. And I can tell you, it took us almost 1.5 years to go through all the compliance, through all, let's say, the governance requirements that we are able to put 2 billion into a DT Capital Partners and let these people manage that in a company which is not owned by us. Buy out minorities. Some hedges were always trying, to find out whether they were in or out. We were always looking at the right opportunity to buy them. We bought the Czech, we bought Slovakia, we bought OT shares recently. So there are parts where we are strengthening our control and realizing opportunities to grab more equity. And we funded that by divesting non-core activities. Look, if you criticize us, there are a lot of things to do, but I have not read any kind of criticizing around M&A at that company over the last years. We should question BT. Maybe it was not the right assessment, and I'm not happy with the development for us as Deutsche Telekom, as a shareholder. But if you look, the value creation of Strato, Scout, T-Online, these were amazing transactions from a value creation. And I think even the Sprint transaction was appreciated by the community. I think we have a world-class M&A organization in Deutsche Telekom. And the last one is, which you maybe not have seen. 3 years ago, excluding the toll collect risk, we had legal risks on our balance sheet, or not on our balance sheet, but at least, threatened on this ones, by something around 2 to 3 billion. Except one single case, all this has been cleaned up. And last week, we cleaned up the toll collect case, which was a potential threat for this company of 9 billion as a total, where we own 50% of this challenge, or 45% of this challenge. So I can tell you, I'm very happy and proud that Thomas and the team were able to take this risk out of our focus as well. This was distracting us. It was eating up 60 million of legal costs. It was a political disaster. So we were able to sort that out and clean it up. And this is even something that we do not have additional legal risks as we had it 3 years ago. Now, this is my summary of the last years. And I do not go into this one. You know the green ones. Compare them with the old booklets which you have on your table. What are the red ones? 2 things. We invested more into infrastructure than we originally thought. I know that you're not happy sometimes if we increase our investments, but I think it was worth doing it from the differentiation which we are gaining in our markets. And second, we were not able to reduce the OPEX in the magnitude as you were expecting. We achieved almost half of it, what we promised last time. And there are 2 main reasons why we haven't achieved it. The first reason is the IP migration isn't ready yet. It's a 6 to 7 year program. It will take us another 1.5 years to accomplish all of them. But the benefits out of that IP, knowing that we are very well ahead with our IP migration, is not fully monetized yet. The second thing is the IT and the automation within the organization. The complexity of our legacies IT and the complexity of how we are operating, we were not able to simplify it in a way as we originally thought. And this is coming with higher indirect costs, both from a workforce perspective, but even from internal cost perspective. So these were the 2 ones where we haven't fulfilled our promises to you guys, and we are bare about that one. moving on to the next thing, where are we now and where are we going from here? And let me start again with some general remarks, because giving you numbers is nice, but you should understand how we as a team are thinking and what we have learned on the journey so far. The first learning we have had was convergence works and our customer loves it. Churn, net promoter scores, or trim significantly higher in the converged offer family than the single ones. So convergence is paying off not only from an ARPU perspective, it's even paying off from a customer satisfaction perspective. Secondly, dialogue marketing is a must. We have to reinvent the way how we think about approaching customers. Omnichannel and thus digital is everything is not the answer. Customer intimacy is staying relevant even in the next future. There will be not every company becoming an Amazon. And even if we're trying to become an Amazon, we will anyhow not be as good as this company. So what's the differentiation in the customer intimacy and the servicing orientation which we have? Thirdly, network leadership pays off. To have an advantage in the network is an advantage even from the commercial perspective. M&A is a valid option for growth, meaning that we could supercharge the US transaction by going for Sprint, meaning if we don't find a way to go into fixed mobile convergence on an organic basis, that we then even acquire UPC and others. If you would ask me, are we in M&A mode these days? The answer is simply no. All hands on deck to get 3 deals into dry, as we say in German. We have the Ftth deal, we have the UPC deal, and we have the big thing in the US. And on top of that, we are investing at the peak level. So therefore, there are no big M&A planned, but it was just a valid lever to improve our portfolio going forward, even to divest activities. The last 1% is the toughest, and with IP, we're just experiencing that. We have to learn and we have to manage that. And last but not least, people make the difference. Companies have to change their skills. Our company has to change their way of being more international, best of breed, in the way of to differentiate. It's a global business and not a local one. And last but not least, we have to even reunivate, bring younger people into the organizations. So what's the strategy going forward for us? Before I come to that one, just a question about where we stand, our point of departure. We are a German company, and we are the leading European telco. And we are positioned now in a transatlantic combination. This is what Deutsche Telekom is about. We are present in the strongest economies in the Western Hemisphere, Europe and the US. 90% of our activities, of our revenues, are in AAA countries. And by the way, we have selected even the European markets which are not AAA out of this list. So 90% are in this less risky environments, which is very relevant for telco, for infrastructure investors. We have a very well-balanced profile between growth in the US, supercharging the growth with Sprint, and a yield profile in our European economies, and we will give you a free cash flow guidance for non-US business later on. We have a great team on board, and we focus always on the local entrepreneurism. If somebody says in the US, we love T-Mobile because it's an American brand. This is the best result we can get. Because we have to operate entrepreneurial in the countries than rather trying to manage a centralized organization. We deeply believe that the power has to be on the ground in the countries. In the future, this company will have 130 million customers in the US and 130 million customers on the European side. It will have 13 billion of EBITDA on Europe and 22 billion EBITDA in dollars on the US side. So it will be a very balanced portfolio, and it gives us the opportunity to select commercially where we invest the next dollar or the next euro. The Sprint deal is an unbelievable opportunity for us. And guys, you can kill me. I have worked 7 years on this with Thorsten and some others. I'm so convinced about that combination. Convinced from a customer perspective that we could really supercharge our position. Convinced from a spectrum position. Convinced from an economies of scale. Convinced from a synergy perspective. Convinced from a partnership position with SoftBank. I'm totally convinced from this transaction. And this is not only something which is creating value for you right now. This will create value for Deutsche Telekom in the next decade. The value creation from this transaction for Deutsche Telekom is significant. And it will create a player which is on eye level in the top league of the world. Take the Chinese guys out of the equation for a moment. We are system relevant in the Western world, both on the US and in the European landscape. And this is even a value if you are playing a role like this. And we have a great governance in the way how this deal is structured. It's not that we are now exhausting our balance, exhausting our debt capabilities, exhausting, let's say, the needs which we have in Europe to facilitate this transaction. The way how the deal is structured, the way how it is organized, is in a way that it's a robust balance sheet and a clear control and a full consolidation. These were the 3 tasks which we had in mind by approaching SoftBank and the partners. What are the 3 main directions of our strategy for this global businesses? Lead in customer experience, lead in technology and network, and lead in creating productivity for our business customers. Very 3 simple directions. Do we have a right to win on these? Let's start with the first one. On customer experience, we have to create a differentiation towards our competitors. We provide the one seamless T-connectivity, converged connectivity to our customers. The Connect app is in the market, being tested, 4-star plus app, which you can use, which is easily selecting for you the best connectivity, fixed line, mobile, hotspots, and the like already today. We are in a beta test, and we will scale that up very, very soon. It's a great app. You do not have to be concerned that your infrastructure, which you're using right now, is slower than the fastest capabilities or possibilities which are around. We have built the European aviation network. We will start with with British Airways soon, and Lufthansa, as others are following. We have the only network in the air, 75 megabit per second. The last piece where people are not connected is getting connected over Europe. We offer leading FMC propositions. We have increased our ARPUs by 9 euros in Europe, or in 6 euros or 8 euros in Germany. We have more than 6 million customers. In the US, we are the Un-carrier, and we can supercharge the idea of the Un-carrier, a proven concept. And we have to digitize the living rooms. Our customer service is continuously improving, and we said last time we're going to reduce, for instance, our complaints by 50%. The results are even higher in some areas. What are we doing going forward in this one? First, our FMC household penetration in Germany and Europe should double from 21% to more than 40%. And seamless connectivity, Magenta 1, is not only a tariff which is integrating mobile and services. Who is selecting for me the fastest data connectivity? Automatically on my mobile phone or on my device. Coming home, I'm switching from mobile to fixed line automatically without losing the call. I can use my entertain service with the same look and feel on all devices which I'm using from T. I have an identity which is enabling me through all the channels, mobile, fixed line, wherever I'm getting connected without having a long registration or complex Kundenprogramme. And we have customer touchpoints who are aware and enabling us to support this integrated proposition. Customer service, I made my points already. We give us even tougher targets with regard to contract resolution and rate of complaints in German service, and Turk will talk about that later on. And in the US, where we have established a team of experts, where our customer service people own a P&L, which is unique in the customer service world. Nobody has it. Normally, service people are just there to clean up. Here, they own a P&L. It's a model which we want to extend beyond the US footprint, because the result speaks for themselves. Net Promoter Score, 35 percentage points, and customer satisfaction, 74. I can tell you, none of the telcos in Europe has even a relation which is close to this number. Second, dedicated network investors. We have a proof point that we have skills and a good DNA on network investments, and therefore we want to roll out infrastructures beyond what we have today. We will push fiber rollout. We are not pushing copper, guys. You know that. We are only investing into fiber, and this is not since today, already since quite a while. And that is how we built this huge fiber network, which we are already running by 480,000 kilometers in Germany and 230, I think, in Europe. And we go beyond that. And the enabler for all this kind of super vectoring, but even beyond that, fiber capabilities, is the BNG, is the IP network which we have built. It's already helping us today, big time. And on top of that, we are driving 5G and edge computing with a special focus on the edge. And Claudia will talk about that one later on. We keep on investing into infrastructure. In Germany, we extend the cells from 27 to 36,000. And we have already increased our run rate from 500 cells per anno to 2,000 in Germany. Loopholes at the motorways in the countryside is something which we have to address here in German environment. Europe, from 40,000 to 47,000 cells, and in the US from 61,000 beyond that, because we want to grab new kind of lands, new areas where we haven't built the 600 and 700 megahertz infrastructure yet. Let me spend a sentence on Germany. Dirk will deeply dive onto that one later on. The problem which we are at the center of this question. On the one side, you're sitting there, and you're concerned enough. What the heck are these telcos doing? How do they earn their money back? What are the political leaders deciding on wholesale access? What is the regulation inventing next time? Where is my money going, and when do I get my money back? What is the return on capital employed of these investments? What is the competitive landscape in Europe going forward? There's a reason that this industry is so low traded, 15-year low. You know I'm fighting for that, to improve the situation. But I understand your concerns. On the other side, you have the public and political demand. We want to be leading edge in the gigabit society. 100% coverage by gigabit by 2025. That's the political demand in the countries. The third one is the competition. The competition says we have up to 400. Deutsche Telekom has only up to 200. So they make a race on speed despite the fact that it's not relevant. At the end of the day, the thing which counts is that all the data services are working. But you have a competitive environment of how many horsepower somebody is offering, whether you need it or not. And the last dimension is the most important one. What do customers need? When and where? So if you are a telco CEO or one of our guys here in the management, I can tell you, every day you sit on the other bench. You are getting teared around in this environment. So we have to find an answer which is creating clearness and transparency around that one. And I think this is something which we deeply discussed. The first thing we said is, if you want to have fiber everywhere, by the way, interesting, cable operators like that we invite fiber to the home, especially in areas where they are not investing, because then they could easily get with wholesale access an offer for these areas as well. We have said no. We do vectoring and super vectoring. And guys, this was totally right. Commercially it was right. It was right from a customer demand. The people are voting with their feet. 718,000 new customers in the first quarter. And this is now, I think, the 5th or 6th consecutive quarter where we had more than 700 customers, 1,000 customers in a quarter on this new infrastructure. We go in the country areas, and we will have 80% of all customers, of all households, with up to 250 megabit by the end or by mid of next year, including the other carriers, 95%. And we won't stop. This is the build-out which we are driving. We will not go into something else. We will finalize first bringing the investments to the millions. This is the idea which we are driving. 95%, including whole buy of 250 megabit per second. And I can tell you this is significantly reducing churn the moment where you have more than 50 megabit per second. Why should you go somewhere else? Then we go into the second step. And the second step is going then for the Ftth rollout, which we started already. We have to build the efficient fiber factory, that we are now extending the fiber from the cabinets and from the streets into the houses in a very efficient way. That's why we show you the technical equipment outside, because the trenching is one of the technologies to significantly reduce the costs. That said, we are ramping up this efficient fiber factory that we will build 2 million households per annum from 2020, 2021 onwards for Germany. This is our contribution. Now, this is not solving the monetization issue. And we do not know exactly under which kind of regulatory parameters we're doing it. So therefore, we're saying, we are only investing under the parameter that we are earning an average weighted cost of capital of 7.5%. This is the threshold. If the regulator is improving the landscape, we can even invest more. If it's reducing the investment-friendly environment, we will not invest this amount of money. So we're now trying to balance political demands, regulatory environment, and the monetization need which we see in front of us. The envelope for this build-out, including mobile and including the IT transformation, is exactly the same magnitude of what we are having today. So we are peaking on this level in our investment, on our investments. Europe is another story because it's easier to monetize, because the costs for deployment are significantly lower. Srini will talk about that one. The only thing I like to mention here, even here, we do the same stuff going forward. We get a lot of, let's say, support in some of the countries like Greece and others. And we will drive even here our improvement of fixed mobile convergence, including fiber to the home. But in all of the markets, we are pursuing and pushing an integrated story. We have fixed mobile converged incumbents, and we have challenges on the side. Next topic, regulation. What we are fighting on. What are the topics which I'm addressing in part? And you have seen the coalition agreement, and you have read the text. And every day we read again and again that the political environment want to improve. The details are the framework for the fiber build-out. They want to go into an ex-ante regulation. They want to consider holidays. They even, say there are new models of subsidization which they're driving, and they have 10 to 12 billion of remedies or sort of subsidization money which they made available for the rural area. And we will, under our framework, under our commercial terms, we will apply for this money. I will skip that. We can talk about the regulation environment, what we are driving these days later on. I'd like to move on to the business side. The business side, very straightforward. And we have proven points on the Internet of Things where we are generating more than 300 million revenues already today. We have a high success rate on the Mittelstand and the SMB market in Germany. Are you aware that our German Mittelstand business is growing by 4%? 4%? I cannot even imagine a time where we were even close to this run rate. And interesting why, the analog services, which we are losing due to cannibalization, are substituted by IT, which is coming on top. Cybersecurity solution, a big business, and our global connectivity with SD-WAN service and JENA is something where we have proof points that we have a right to win. Going forward, even here, it is based on an integrated network, fixed and mobile connectivity, plus cloud, software application, IoT, vertical solution businesses, environed in an environment which is secure. This is the business model which we are driving. And by doing this, we are able to increase the revenue from 6 to 6.5 billion with the Mittelstandsoffensive 2.0. Remember, the Mittelstandsoffensive was something we showed you last time. And a revenue increase from 3.2 billion to 3.6 billion in the European landscape. Same story, same strategy going forward. T-Systems in this one is a special animal. And the only thing that I want to say right now, because Adele is coming to that one later on, is we have three pieces of it. Telecommunication core business, 2.2 billion. This is an almost stable business where we are mainly following our German customer base across the globe with connectivity. The second piece is a very exciting growth piece. Digital solutions, IoT services, SAP. They are all growing entities and growing businesses. Some of them double-digit. And classical IT, dedicated SI solution and management, infrastructure service and private cloud, is the problem child in this portfolio. We are working on a restructuring program for that one. And we are working on something which is the best solution from a value perspective and an EBITDA. This is explicitly not excluding a potential sale. So we are considering all options. There's nothing to talk about today, but all options are valid ones as long if they're helping us to increase the profitability, that we have a cash contribution for the whole entity latest in 2020, which is positive, and that we have a revenue increase even in this unit. Every unit has to grow. And there's no excuse for a negative free cash flow of one of the operations. These three pillars follow two directions, following are two underpinned streams. The one is safe for growth investments. if we want to stay on this magnitude of investments which we are pursuing, and if we want to close the cost benchmark gap which we are having, the way of doing it is committing 1.5 billion reduction of indirect costs within our base, excluding US. 800 million in Germany, 400 million in Europe, and the rest about systems and GHS. These areas are coming from personal-related costs, but they're coming as well from areas of IT automation, real estate, from areas of reducing external workforces, and procurement gains, which we are targeting. And Thomas will talk about that one later. And we will accelerate the digitization of the company. The digitization of touch points, simplifying the product, simplifying the way how we do our IT services, the way how we exploit our data, and how we run real-time operations in a better way, especially in the network infrastructure. Commitment here, one target or one KPI that we are aiming for, that the amounts of requests solved by our digital channels and the app are going up to 70% in Germany and higher than 50% in the European footprint. Aside of that, this cultural transformation has to move on. And I think it has a value that over the last 12 months, we have entirely renewed the operational team in our organization, with Adel Al-Saleh for T-Systems, Srini Gopalan for Europe, and Dirk Wössner for Germany. But what I want to stress here is this best of breed. If you go here and just some names, data governance, Omar Khan, Omar Tazi, Marroquin, Alex Choi, the former CTO of SK Telecom, Campbell McLean, iArchitect, we have on all levels trying to get the best experts across the globe and bring them into our footprint. Because we think it is anyhow a war of talents, and we have to get the best and smartest people on board to drive leadership and to drive this leading mentality and leading attitude. So therefore, there has been a strong attempt over the last years, and which is going on the internationalization of our company. And on top of that, the drive of the cultural transformation, which we are driving here. And we will talk about tribes later on. We will talk about pool organizations. We will talk about the design thinking. We will talk about the MOOCs, which we are running within the organization. So a lot of changes, cultural-wise, which are going while we're sitting here. New asset management and investment models. I think we have talked about the group development area, and Thorsten will present about the idea behind that one. Innovative spin-outs, so we are not building it in the companies like Engena or Mobile Itch, a company which is based in the Valley. We will drive growth and financial investments through our investment vehicles, which are outside of Telecom's corporate world. We are creating new flexible incentive models, which are more tailored to the business success than they ever were in the past. Creating or based on value, for instance, in the Dutch environment. And we are driving agile developments in pool organizations to be more flexible and more productive in the way how this organization is set up. All of this has to come in a very sustainable and with a high corporate responsibility on what we're doing. We stick, and it's tough, we stick to our 20% CO2, 20% reduction of CO2 footprint. Most of the people outsourcing their energy problem to us, because the moment our cloud business is growing, the energy consumption is on our side. So if we want to do the cloud business, IoT services for customers, and at the same time reducing our CO2 footprint by 20%, I can tell you this is a contradicting target. We will have a procurement across the globe which is following all the sustainable standards. We have this human rights discussion about the organization of unions and alike across the globe, including the US. Coalition freedom and other services which we are applying. We have a high social engagement across societies, which we are driving as Deutsche Telekom in a lot of areas. Just to give you an example, on the 160 million which we have in our Telekom Stiftung, focusing on MINT, or STEM as we say it here. We have 340 refugees just, employed here in Bonn or in Deutsche Telekom. And we have just invented the digital ethics standards for artificial intelligence as the first telco in the world. This is, let's say, our ambition. 3 pillars: leading customer experience by one connectivity, which you call fixed mobile convergence, and a perfect service, which we call tadellos. Lead in technology with an integrated gigabit network, which is the basis of everything what we're doing, the center of our strategy. Enabling customers to create productivities through digitization with secure ICT solutions and big IoT. Funding this program by a Save for Growth investment program, which is reducing our cost base by 1.5 billion, in a way which is more agile, which is more digitized, and which is working even faster as it is in the past. This together leads me to the following commitments. Group revenues growing from 2017 to 2021 by 1 to 2%. Group adjusted EBITDA growing by 2.4%. Group free cash flow growing by 10% going forward. And we change to a new KPI, which is the guidance for adjusted earnings per share, which has to go to €1.20 by 2021. Currently, we're in the vicinity of 85 or whatever year. The return on capital employed has to be bigger than the WACC, a big thing which we never had and which we achieved. This was my main topic on 2012 Capital Markets Days, as some of you might recall. The group cash capex is peaking and stable for this period. No additional funding needed. We anyhow cannot spend more money these days because the capacity is at its limits. And we will have a shareholder remuneration which is following or reflecting the growth of the adjusted earnings per share going forward. Why are we going for earnings per share than rather to free cash flow? Feedback from you guys, because the consolidated free cash flow number was not the cash flow which we own. If you have a US entity, which we own by 42%, this gap of consolidated free cash flow is even enlarging. And there are reasons, Thomas will talk about that later on again. The floor remains at 50 cents per share, and for 2018, we commit a dividend of 70 cents. What is in the case that the US deal is taking place, which we are expecting? We confirm revenue, EBITDA, free cash flow targets, ROCE, cash capex, indirect costs, and the shareholder remuneration going forward. For the free cash flow and the adjusted earnings per share, there will be a slightly dilutive effect in 2021 and 2022 expected. These are the targets going forward, and we will discuss, let's say, all the details in the upcoming years. My last statement: why should you invest into Deutsche Telekom? What is special at Deutsche Telekom compared to other telcos? First, we have a unique footprint. We have a transatlantic presence in the world-leading economies, Europe and the US. In Europe, we are the converged leader. Nobody has a bigger fiber backhaul, a fiber infrastructure, and a bigger FMC footprint. In the US, we have an outstanding mobile position which we can supercharge. What we did with Metro PCS, we can do at an even bigger scale. This is a unique opportunity on both angles to differentiate. Second, growth profile. Tell me another telco which is growing in 95% of its markets in Europe. 95% of its markets growing. And we given a commitment even beyond that, because T-Systems is giving a growth commitment here as well. We have untapped value potential. It's a negative, but a positive as well, because we have it. Our cost position is giving us the opportunity to get reduced by 1.5 billion. And the digitization is something which we anyhow will accelerate, which is giving us another, shift or push on productivity. Fourthly, it's very easy to understand us. We are not in content, we are not in search engines, we are not in banking, we are not in markets which are very highly volatile. We are very easy to understand. Very easy. We talk about connectivity at the heart of the Western Hemisphere, and we have a track record of being very disciplined in the way how we manage our portfolio and doing an M&A. And last but not least, we have a new team, a hungry team, being on board with international leaders around the world with a winning mentality, and I hope that we can convince you from that one during this capital market sessions. Thank you very much.